Tax Talk will not be seen tonight, so we can bring you this very special presentation live from Detroit. You're watching Tax Talk Live with Markway Boyd.
So, what do I tell him? If you are a small business owner, you have to pay estimated taxes. Every quarter, you have to send your payment in so that you don't owe. And they do it diligently because I stay on top of it. Because if you owe 1 of the 5 years, you're back to square one. Effort is wasted. So that answers the question for you.
Wait for the mic.
I'm sorry?
They said wait for the mic.
Okay.
Okay, I've been coming to these classes. I have great, and I'm gonna, I just don't come and stuff and don't do anything, right? So what would your suggestion be if, you want to do, like somebody wants to do like 3 businesses, as far as taxes, and I want to know how much money do a person need to make before they start worrying about the IRS question? Because if because I believe that there are going to be people here that at one time they had one income and now it's going to triple or maybe quadruple because of different ideas that we get here come to these classes. So when do you think we should be worrying about the IRS, or should the small person that makes maybe $1,000 a week and they just start, should they be worrying about the IRS? You know what I'm saying? When should they start worrying about the IRS?
Well, that depends. It's a very, your question is a very, very open-ended question. And the reason why I say it's a very open-ended question is because it depends on how much money you make. So let's say you make $30,000 and you have 2 children. More than likely, you're not going to owe anything. So that income tax will not be your concern at that point. But once you start making a lot of money, when I say a lot of money, let's say you're making $60,000, $70,000, $80,000, which is not a lot, but to some people it is. And you haven't paid any taxes at all because you are self-employed. See, if you're a W-2, it's a different story because they take the taxes right off the top. But if you are self-employed and you don't have a lot of expenses, the chances of you owing start getting bigger. So to avoid owing, what you are required to do is every 3 months, whatever you have made, you have to send in estimated taxes, at least 10% of that, so that you don't owe all of it at the end of the year. Well, most people just don't do it. So at the end of the year, they end up owing all this money and they can't afford to pay it. Because you can't afford to pay all of it at one time, you end up calling the IRS trying to make a payment plan before they start putting all their big ammunitions on you. Right? So you set up a payment plan for maybe $150 a month. But then, so long as you owe them, the interest and the penalty never goes away. So a little bitty amount that you owe, it might take you 8 years to pay it. Because the interest, every time you pay them, is only for the interest and the penalty. The principal is not taxed at all. It's like a credit card company. And so you keep on spinning your wheel over and over and over and over again. To make it simple for you, every quarter, make that payment and forget about it so that at the end of the year, the amount that you owe goes down. That's the most simplest way to do it if you are self-employed. And you have to also remember when you owe, they add interest and penalty right away. What do most people do? When they owe, they say, I'm not filing. I'm not filing because I owe. But what they don't understand is if you don't file, IRS don't care. Why don't they care? Because so long as you owe them, the statute don't run. So let's say you haven't filed since 2006, and you owe for that year. They start adding the interest from April 15th of 2007 because that's the due date. 2006 is filed in 2007, right? So 2009 tax return is what we are filing right now. So from April 15th of 2007, they started adding the interest. Guess what? By today, the interest and penalty is more than the actual tax that you actually owe. So do they care if you don't file on time? No, they don't. What is the most sensible thing for you to do? File it, call them, make a payment plan, and start paying on it so that you can reduce your what? Interest and penalty. Yes?
Hi. How do you know which disabilities income is not taxable? And to what point upon receiving disability income, where does the taxes start?
Well, disability is generally not taxable, depending on what type of disability you are getting. Well, there is a Social Security disability, which is generally not taxable. There is workman's compensation disability, that is generally not taxable because you got hurt on the job. Now, if it's workman's compensation, it is not taxable. But if you got sick and they ask you to go and stay home and they are paying you whilst you are sick, that is taxable. So it depends on what type of disability it is that you are receiving. That's what determines what is taxable or not taxable. When we talk about Social Security, it's generally not taxable. Workman's compensation is not generally taxable, but sick pay is.
Long-term disability from your job is taxable.
Well, that depends. If the long-term disability is classified as workman's compensation, that means you got hurt on the job, it's not. But if it's sick pay, yes, then it is taxable.
Because you be talking about full disability, full disabled, you can't work, ain't supposed to be working at all.
And what triggered you not being able to work at all? Is it because you were working?
Factory injury.
Yes.
Job injury.
Again, the factor injury is your employer that determines whether it's workman's compensation or sick pay. If it's workman's compensation, it's not taxable no matter how long it is. But if it's sick pay, it is taxable no matter how long it is.
Okay, say you're on full disability. Now you want to go into home and rent job. Where you going?
For more information about Smart Business LLC, contact Markway Boy and the professionals at 248-395-3388.